So this one is about drawing the supplies and demand zones. I'm gonna also share it with you on the screen so you can understand it much better. But I prefer always the whiteboard because it's more interesting the way and the approach. So here, as you can see, we have, for example, the supply zone, right? It went up, we had the fight and boom, down. What we are looking to see here, there are two options. The supply level with the tails, okay? So as you can see, the tails here, here, and with the bodies, which can be here the body, right, and here the body. Normally the way I approach is the following. When I have to put the stop loss, I always take the tails and I put it about here. So always the downside or upside, when we are talking about the supply, the upside tails, it's always there. So I'm putting the level all the way up, but when is the downside, I'm always inclined to get on the body. Of course, I can put it as well here, and there's a huge risk that whenever the market goes back to test the supply level, most probably it happened to me so many times that I was why I lost this trade, because it just touched this level, just touched, I mean, and started going down. But I always put my entry price here on the body for two reasons. First of all, because with the body risk reward ratio, at least it's double. For example, we are letting the price enter a bit more. If this is, for example, let's say 1, and the same can apply this one. Imagine which one is better for me in terms of risk reward ratio. This one, right? Because with this one, how much I can get? 1, 2.5, maybe 1, 2. But with this one, I can get 1, 2, 3 easily. 1, 2, 3, 1, 2, 4. So I always prefer to go with the body, but the tails on the upside. The second important thing here is that with the body, there is more pressure down because the price is going up. The more the price goes up, the more selling pressure. Always is like that. And if you are in the supply zone, then the pressure can be tripled. And the potential successful trade is higher always. Of course, there's a strategy that we talk about in the school, our community, which is about you can enter with a small percentage, then after, as soon as it goes to the main point, enter with a big percentage. So in order you don't make the lose or you lose the potential trade. The same applies here. We have the demand zone, let's say, right? Which is with the tails, as you can see here. You can do with the tails, you can do without the tails. So here we have with the body, you can go, for example, here, you can see that the body from wherever it starts the body, and as well as here. So I'm not sure how much clear it is, but you need to make sure that in order to not lose the potential trade, you can touch the enter buying on the tails, but your zone is going to be much bigger than if you go and enter into the bodies. Okay, that's super important. As you can see here, you have 1 to 2 risk ratio, or you have 1 to 4 risk ratio, and even can be much more. That's important to understand. Remember the tails and the bodies. One thing that I'm not gonna share here, but maybe you know it's not a big deal, but is about going to the lower time frames to find even better entries. And finding better entries means that you can lower twice or 3 times more your demand zone. We have kind of the demand zone, and inside the demand zone, maybe here we have an even smaller demand zone, which can be like chirurgical point of entry. And once you are there, the market should react like that. So that being said, let's move to the next one, and we will understand the take profit, the stop loss, the trailing stops, and all that stuff. Thank you.